call is just to quickly just scroll up a little bit here, and at 8:45, as you guys can see, and 8:46 respectively, I pretty much sent USD lower time frame analysis to my students. Thank you so much, Bernie. Thank you so much. This call would be even better because I'm gonna go through the rest of the structural things I use, and this will even be good for students, right? But yeah, at approximately 8:45 or 8:46 respectively, as you can see, I sent out some analysis here. You like my analysis? Yeah, bro, I like your analysis. It's good, but your analysis was more or less the same. But as you can see right here, we have a level, right? We have it 14361, right? Now, how did I get this level? Well, that's exactly what we're going to talk about. So this call will not be that long, but it will just showcase pretty much how you get the levels in the markets or potential levels in the market. Since, we don't have so many people. This is even less than my students call, and I'm just going to send you guys what happened after we pretty much went into the level. Now, disclaimers before we go into it. I want to be full honest. I did not trade through this level. All right, I did not trade through this level. So as you can see right here, when we touched the level, we pretty much saw this potential high for the day, right? I don't know if it's gonna be the high of today, but I think it's gonna be the high of today. But yeah, we're gonna talk about how I got this level, because what a lot of people trade is just not, they don't trade significant levels. They don't trade like specifics in the markets. Instead, they trade. Oh, we saw, for example, this time-based, or we saw, for example, this FVG order block. Not time-based liquidity sweep, it's goaded, but this time it did not work, which is why I did not take this trade, right? So I only follow my setup, and even though I'm not supposed to share my charts. Don't worry, I sent this in the ideas channel right here. So if you go into important VC chat, everybody, you can just open the chat here, where everybody writes the questions. You'll be able to see the pictures I sent you guys. So you'll be able to see the analysis I forwarded from my analysis channel at 8:45. Hopefully you guys can see that. And then you can see the picture of right now, right, of pretty much what happened after we went into the level and we traded lower. Now, I wanted to do this only for students, but since like I noticed we only have like 9-10 people here every single time, and the rest of the server is just bots, I can actually be comfortable showing some of you guys here, the lucky people, which always is here, what you're all are pretty much missing in the markets. Since I think, the people here really want to put in the work, rest of the people are just bots, I guess. They don't want to listen to me. If I said this was Enigma or something like that, we would have 200 people, 300 people in this call. So I'm happy. But no, this is not Enigma. This is probability based. But you can see right here, so it's not 100% win rate. But you can see right here, I did not use any F5 value gaps. I did not use any inverse value gaps. I did not use anything specific here. I used this based on math. All right, simple things, super simple things. And you guys can, yeah, whoa, bro, he's also getting it. Look at this. Look at the Bernie, bro. He's also getting it. Potentially, it's from the same things we're gonna talk about today. So let's just dive right into this specific call here. So starting off, everybody, I'm just gonna start sharing my screen here for the Euro USD. Now this call will not be, that long, but nevertheless, it's gonna be very significant. All right, it's gonna be very freaking good. But disclaimers once again. I did not take anything from this level here. I did not take any trade, and I'm gonna go into detail about why I did not take anything from this specific level, but also how I got this refined level. So starting off, how did I get this level? Well, if you have not watched the previous calls, I would definitely recommend you watching them, because then you get some insight into the externals I used to predict we were going lower potentially on Monday, Tuesday, Thursday, Friday, Wednesday. Wait, I'm sorry, Monday, Tuesday, Wednesday, Thursday, and Friday. All right, I think we're gonna be bearish here for USD, and I think furthermore we're gonna be bullish for the dollar. Therefore, so I'm seeking just higher prices throughout this entire week. Low prices therefore for foreign currencies. Simple stuff, right? I explained this in the previous call, so if you have not watched them already, right, watch the previous calls. All right, a really freaking disclaimer here. Really big important disclaimer. Oh, that's amazing, bro. Oh, bro, that's amazing, bro. That really warms my heart. At least someone is putting in the work here. That's great. That's great. Anyways, so like I said, the things we're gonna go through is how I got this level and why I did not trade from this level, even though I predicted the high of the day, right? Because the same thing, you know, the predicting and trading is not the same thing, right? You can predict higher lows of the levels of the day, but you pretty much still, even though you have levels, you need your system to play out, right? So everybody, going over to the data here, I'm not going to go over the DXY in this specific call, right? I'm not going to go over the DXY here in this specific call, but I am going to go over higher time frame on EURUSD. But I just need to tell you guys that, well, it's really freaking important for you guys to be able to listen to the previous call, since in there you're going to get an understanding of why I'm looking for a higher DXY and also why I'm looking for a lower EURUSD. Pretty much trading um, like why my bias was bearish overall from a day to day, and that's what's important to note. So what we're going to start off with is just looking at the daily chart here. So notice everybody, right, that I did not want us to, before, right, you establish a level in the markets. Let's go into detail about things. Let's go in depth, guys. Let's go freaking in depth here. So before you establish, right, um, you know, you need an established bias, you need a direction of the markets, etc., etc. You need to know where, in a probabilistical manner, the market is going based on what has already happened. Now, you already know my methodologies in terms of liquidity. If you have not watched already, please do so, since I said it's going to get you better understanding. And therefore, based on those things, you will be able to see, well, we have taken out liquidity here, right? And therefore, we should only go for sell side liquidity, right? We should only reach for the sell side liquidity, 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 until we have rebalanced the rest of the, like, have equally as much sell side liquidity as buy side liquidity on resting on both sides. Now, why I'm telling you all this is because this also establishes an understanding of that on a probable basis. We should not be able to take this high nor this high, right? It become terminuses. I don't know if you're familiar with terminuses. It's just protected highs, right? Really important. But now, this gives you an area of where we overall are to see a reversal. Now, you can even pinpoint, if you think about it, that the reversal should not happen uh, over this significant level. Now, why is this a significant level? Well, if you think about it, if we were to deliver up over this, we would engineer equal highs here, which would engineer liquidity, which would mean the next day would be a reversal. And since we're not looking on a probable basis, since the fundamentals are bearish for USD, we overall want us to deliver up, you know, but to just a certain extent, so we don't engineer any equal highs, and so we don't fill any other objectives, since that would be less probable. Of course, we could still do so, but now we talk about probabilities. So now, looking at those specific things, you already have an established area of where you want to see a reversal, and that's just the market open, right? The market open right there, where you can see a reversal, and potentially over the market open to this. And now you know why. So we are looking for this area right here, somewhere in this area, to have the reversal. That's the starting point, right? If you think about it, starting point. Now moving further into detail, and now you know like why we should not have traded up here, why we should have traded up here, and why the area ends here. All right, everybody knows this already. Hopefully you guys know this. Now, if you think about it, since if we go into now a lower time frame basis, 4 hour, you can do the same thing here. All right, you already know we opened up here, and so if when you're starting the Monday, right, when you're starting the Monday, you're gonna get an area of pretty much this extent. And you can see it even worked for a low of the day here, right? It even worked off the low of the day here, if you think about it. But at least the high of the day should be somewhere in this area. Now, we have the Asia range here. Now, the Asia range encapsulates this extent, right? But therefore, we also have engineer equalize here. So if you think about it on a logical basis here, looking at it on a day-to-day basis, we should not deliver over here, over this high. I've looked at especially why we should not deliver here, since if we were to deliver over here, it would be equalized, and therefore it would be higher probability for us to deliver this, which would be very freaking low probability for us doing, since the fundamentals are bearish, right? Now thinking about it, we have already traded over the mean. So now we can clear this area, and we can even potentially move this area up a notch. We can move it up to half here. So now you have an even smaller area you're going to play with, right, for a probable reversal. So now at this area, where we should see the reversal for the downside of the rest of the day. Like you see, it's not really that significant, right? This area is approximately, I think, 30 pips or something like that. It's 22 pips, guys. It's 22 pips, as you can see here. 20. Oh no, it's actually 25 pips. 25.5. But it's not much, right? Now, if you think about it, here we saw consolidation, 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 and here we saw engineer equalize. So now we can move this further down lower. Now, I'm not giving you guys, I'm going to give you guys how I got this level as well, like this precision-based level. But I'm just going to tell you guys, before you get this precision-based level, you need to focus on where you should have the level established first of all. So you need to know like where the probabilities of a day reversal is going to be on a basis of liquidity. Now, after you have established that, like after you already have established in an proximity where you want to see the reversal happening, you're going to move over to standard deviations. You're going to find out the mathematical reversal, guys. That's what you're going to do. And so overall, we have this already. We have the area. The area we have talked about is just pretty much from this high, which is a terminus, 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 right? But we can only focus in on this terminus. And we should only focus in on the area where we should get the level. Now, how can you get deviations? How can you get standard deviation? Well, you can take any given manipulation, right? Which I've previously taught. Now, this is also another way of looking at my methodologies, right? So let's take, we'll see if we have any, yeah, we can take this right here. This is a probable manipulation, right? As you can see. And as you can see also, this is like a manipulation on like, let's say 4 hour, I would say. And higher than 4 hours, I use the wicks. So, oh, I'm sorry. I need to just move it. I just need to change it here. So sorry. Wait, let's go to the 5-minute time frame. It's just so it does not look messy. But I think if we just move over to a 4-hour time frame, you'll be able to see that this is a 4-hour manipulation right here. You see, if we take it from this to this, you'll see like 50% is right here. So you can see it with your eyes, right? Which already gives us, just using one standard deviation, right? Just using one standard deviation gives us this probable level, right? But that's not it, right? A lot of people use standard deviations alone, but I use always manipulation. I use it manipulation, deviation, and I use alignments between deviations. And I use that for all things, all deviations I use, right? But now yet again, what other manipulation could we take for us to, you know, get a significant provider of where the level should be? Well, we can even move over to potentially another 4-hour one, right? And so we can move over to this, right? To this extent, right? And we can more or less focus in on here. And we could potentially, I'm sorry, we can potentially use all of this range right here. I think, let's see which range I used. Oh, I'm sorry. It was why it was wrong. I'm super sorry, guys. Now let's see which range I use. I think potentially this one or some range here. Potentially not even this one. I'm sorry. We'll see. But I think, you know, this one will work either way. Should work as well. Okay, it does not really work here. But this is the hard part. Remembering which deviation I took, because I always delete them afterwards as well. Anyways, you know, you can take any manipulation of a deviation. I've already taught this concept. So you can take this one, for example. You can take this one and just find an alignment between them. Now, another way I pretty much were able to do this, and what I always focus in on a little bit is, of course, the what is it specifically called? Like other deviations other than the deviations I use. So I use specifically, you could use CBDR for examples, and you can take this example here as well. can just give you guys this example here, where I just pretty much take, I think, where let's look at 19 range here. I think I just use this whole range right here, and I use this whole range here as well. Yeah, as you can see, we got this level right here. So yeah, I used multiple manipulation deviation. Now I won't go into detail about the specifics I use, like why I use this and why I use that, and etc, etc. But I just use deviations. It's just part of my methodology of measuring ranges, right? And you know, ranges is a big part of what I trade, since it's all based on engineer liquidity, which I've previously explained, and I've explained why it's specifically formed during ranges, etc, etc. And it's in the previous call, right? It's in the latest uploaded YouTube video. But now you understood how I got this level. But since everybody struggles with finding the correct level, right? Everybody just struggles with finding, oh, is it this level? We can take an example here. We can take an example here. So I'm just going to form like this. I'm just going to do like another one right here, exactly like here. You're going to find like, let's say 100 different alignments, right? Your job here, and what I want you guys, and what I want to help you guys with today, is just finding, is just helping you guys find which range specifically you're gonna use, like which level of these 4 levels you are to find specifically. Now, why is this super important? Well, as I told you guys, it gives you, you need to find like which of these levels is most probable. And I already talked about how I got this level up here, and why I didn't, for example, use any level under here, or any level here, any level here, or any level here, right? Instead, I talked about why specifically I used um, this level instead of all the rest of the 100 levels you could get, right? And it's specifically, I'm just going to mention it again, since I think this is really important. It's specifically because I have terminuses here. I know on a probable basis we are to be bearish, and I have this terminus, and I need to then therefore minimize it, the area, right, which I can get the level on, enough for me to get a specified level, if that makes sense. Now I can take from here to here, for example, right? We can take from here to here, and between this area right here, between this area to that area, the starting point of the Asian range. This is what's the probable area. Now I've talked about why I think, why I thought this was a terminus. I'm just gonna mention it quickly again, so you understand the point I'm trying to make. It was just because it was this right here. If we went over this, the probabilities for having a bearish week minimizes, since we would have engineer equalize, and then we would need to take those, and then we would need to take those, and then it would just continue up higher, which is really improbable. Now, I think it's higher probability for us to be delivering down lower. Hopefully that all of this makes sense. And now I want to, as I talked to you guys about, I've shown you guys really important shit here. Like I pretty much gave this for you guys to understand. Now this call is not like this specific part is not gonna get uploaded specifically, but I think this will help you guys. Some of you guys especially struggling with understanding what I trade and how I trade um, specifically to catch these specific levels, etc., etc. And I want to give this to you guys, since we are just this small group. I think majority here of people, I think there's just 5 normal people here. Yes, we have just 5 normal people here. Rest are just other students, etc., etc. So I just want to give you guys this as well, to think about, and ultimately not to not to like intrude on your system, etc., etc. But I just want to give you an understanding of what I'm doing, etc., etc. Helping you guys potentially, some of you guys. But if you have a profitable model, if you have like a systematic approach you really like, don't change anything because I do something. And that's something you need to take with you, right? You cannot change anything because some other TikToker, some other influencers does something. It's not good, right? Don't follow the trends. Instead, follow yourself, right? You're doing this for yourself. Um, yeah, but it's only 5 people. They have always been in these calls. These people are always in the calls. And those people are specifically the people I'm doing this for, right? They're very, very good. Now they're not understanding it to a full extent, but it's still gonna help them to an extent. So it's hopefully good. Um, any questions no so far, guys? Any questions? Otherwise, I think I'll move over to Nasdaq and actually analyze it, because I think we need to talk a little bit about First call for me. Oh, right, that's good, bro. That's good. What did you think about it? What do you think about this? Like, very short one today, but we're gonna move over to Nasdaq and we're gonna talk a little bit. The calls usually are longer than 20 minutes, but I think it's good sometimes to have like these shorter ones because I'm not gonna host any. My calls or my specific calls is usually pretty much 1 hour longs, which is crazy. Anyways, let's move over to GBP. No, not GBP. Let's go over to Nasdaq and NQ specifically. I'm gonna just do this. NQ here. NQ1H. So we're gonna go over here. I'm gonna specifically look at what I was actually looking for today. Trading Nasdaq. I did not trade it either today. I was looking for it, but I did not take anything. All right. Instead, I did like a forward, right? So I did not take anything today. I'm probably gonna take something tomorrow. We'll see. If USD forms a nice Asian range, I'm gonna take USD in trade, and I'm definitely gonna take a Nasdaq trade. But just wanted to show you like a forward test I did today, etc., and run through it as well, since I don't think anybody have any questions so far. And it's very simple. It's very simple. And this goes, since we have multiple students in here, I just wanted to show majority of you guys. So this does not go for everybody here because it's some basic shit. But so the students here were very excited for me. I was gonna host a live call, and I was just gonna go through specifically what I was looking for today, right, on Nasdaq. So yeah, some of you guys will understand. But look at this. It works perfectly here. So we had 1530 here. I'm not going to specifically mention what this is, by the way, but the students knows I talked about this yesterday. I talked about this previous day. So like, rethink what I've said, students or all people, but everybody can listen to this. Rethink what I said and just pretty much look at this, right? Because this is exactly the thing I've talked about. Now, look at this. We had 1530 open here. All right, it's very freaking simple. And instead, like the first freaking manipulation we went for is super simple. As you can see, we took out this right here, we took out majority of the sell side liquidity here, right there, right? And we also trade over this specific level over here. Not really the best, but now we're gonna potentially go for new all-time highs, right? So we're just looking for the same thing tomorrow. But you can see here, this is what I forwarded here. This right here, this sharp down move. I really like it. I really like it. This down move here and this up move. Potentially it's called like the power 3, the 10 p.m. power 3 or something like that. But this is what I like in Nasdaq. This is what I like to trade. If I were to trade Nasdaq, or I am trading Nasdaq, but this is what I'm trading. Just trading the 1530 open manipulation, I think. It's super simple. It's just super simple. I think a lot of people are doing it, but I'm just doing it in confidence with dark pools. So this is what I'm doing, etc., etc. Also, you could do standard deviations here if you'd like to as well. But, I'll just, super simple, right? This is what I'll show you. It's super simple since you have the long range, right? You have the long range high, and you have the long range low. And look at this. It's super simple STA here. See, long range low, bam, bam. Look at this. Super simple STA. Now we are looking for bullish price. Why I did not take this today was because I was looking for this right here. I was looking for this, of course, up move, but I was also looking for potential for a down move, but we did not see any displacement at all over this high right there, since I was bearish, but now I'm switching to a bullish stance. So this is also, like, this is what I want to, in a comprised way, say to everybody here. So I'm going to drop new analysis, etc., etc., but I'm also going to focus on getting yesterday's call out. But yeah, I'm looking for this high getting taken out tomorrow, so you can focus in on this high specifically here. And yeah, I can actually show you guys how you get an probabilistical area here as well, if you would like to, everybody here. So I'm just going to show you quickly here again how you get a probabilistical area. Let's say you were looking for lower prices or high prices tomorrow. So let's focus in on getting a probabilistical manner. So let's say you're bullish on Nasdaq, right? I'm not specifically that bullish, but I'm you can trade both directions here, I would personally say. So looking at this, right? Looking at this, how are we to get a probabilistic manner? Well, we can go into lower time frames here on Nasdaq, and we can see where is the equal lows, if we have any equal lows. No, we don't have any equal lows. So we have sell side here, right? Now, where would it be considered engineer liquidity? Well, hopefully everybody have pretty much understood what I consider as engineer liquidity. We could either be trend line liquidity or equal lows. Now we have already a low sold in here. So if we were to deliver close to this, it would automatically be equal lows, right? Automatically, personally. So I would say the area starts here for the probabilistical manners, right? For the probabilistical manners of getting and finding an um, level, right? For you guys, if you're using standard deviation and you're bullish, right? Now, furthermore, what you can look for, as you can see here, as you, if you can even minimize this further, since we have taken out all this engine liquidity, but here we actually have equal lows. Yeah, I would keep this. I would keep this for getting a level. Potentially move it over like this. Potentially move it over like this for NQ. Now, furthermore, what I would do is just split this whole range. So, like, if let's say this is the daily high, I would just split this in half, and there you have an area right here. This is the area. And I would get the levels under this, and I'll get the first level here. Like, first level under the equilibrium low, right? Under the discounted low. So if you were to just find standard deviations, or do standard deviation through alignments or whatever, I would personally find alignments under these equal lows. Meaning this looks good now on a 1 minute if you think about it. We have this area to play with, this little area right here to play with. And you can understand why. You can see we have taken out this sell side. We have more or less here equal lows, right? This was the equilibrium level, if you think about it. We have this specific area to play with. This was the equilibrium. I'm just going to delete this now. We have this equal low. So now look, market could potentially, as we're delivering to this high right there, I think we're going to deliver to this high. I think we are to pretty much engineer some more liquidity here. Hopefully form equal highs. Since all I'm doing is just forming engineer liquidity. We have equal highs already established here. We can pretty much have this right there. This forms equal highs, but you also have more engineer liquidity, here. So all of this is just engineer liquidity here. All of this. So you have this stacked up engineer liquidity here on one side, right? But you also have these engineer liquidity points right there. This right there. And so I personally think we would hopefully continue engineer liquidity. Hopefully you're gonna get some level. I'm not gonna show you any specific level, but hopefully we'll get some level. And the first level under the equilibrium here. So like under here. First level, potentially under these lows. So we can even minimize this further. Since this was equal lows, we want this to get taken out. We can have this. We want a level to get formed here. And as you can see, we have this. If we were to get engineer liquidity. If like the market, let's say, settled in a low here. Would this be considered equal lows? Yes, it would. So we can drag this up even further here. Even further for a reversal. So would the market engineer equal lows here? Yes, it would. So like how far can we drag it up? Like to half of this. So the first level you get in this small area right here. Look at this. And you can even use this potentially. Like you can even use this support and resistance level. Like this becomes a support and resistance level. Like you can use this for but I would get like a level. So I would just let the standard deviation math level here. You know, based on ranges or whatever, based on manipulations in the markets, taking liquidity. And I would pretty much look for a low of the day here. And I would look for us to trade up higher. Now, you got so much sauce now. Bro, this is crazy. This is crazy, but this is what I'm gonna trade tomorrow at least. So now you know if I take a trade, if I take a loss, you know what it's based on, and I think it looks quite good, right? It looks quite good. But if we get like a level here, let's say you get a level here, and you don't get any level here, listen up, guys. So let's say you get a level here, right? Would you use this level? Yes, but let's say you get a level here. Let's say you get a level like right there. Would you then use this level? Is this probable level? No, it's not a probable level. Why isn't it a probable level? Well, it's not a probable level since if you look at it, if this level was used, we formed engineer equal lows, right? Look at this. If this level were used, we form engineer equal lows. And is this probable? No, it's not probable. And so you want to place where a level don't off engineer any liquidity. Since you never want to be opposed to engineer liquidity, it's best to trade to engineer liquidity, trade to the support and resistance level, trade to the supply and demand level, and it's never good to be against this right here, prime example, and this right here, trendline liquidity. It's never good to be against these shit, right? You can potentially even call this whole thing engineer liquidity, this whole thing right there. So if you think about it, if we take the middle part here, if we take this, wouldn't all the engineer liquidity be cleansed? Yes, it would, since they will break the trend line, as you can see, and would take the liquidity here. Now we're not talking about retail liquidity, we're talking about institutional liquidity here. Yeah, hopefully this gives you great freaking insight. Very saucy call, very saucy call. But yeah, now you get some insight into what I'm looking for, at least, etc., and how my methodologies work, but also in a probable sense. Now, this model, as I showed you here, I'm working on it. It's just, my students don't take my Nasdaq trades. They've never taken it, hopefully. Since I just, this is a model I'm developing. I've never traded a futures as an financial instrument. I've never traded Nasdaq as an asset, like overall. I've just started this year recently, right? So I'm a newbie, right? How do you personally define a high probability order block? Well, it's very similar to what I showed you here. You need to find a defined area where order block should be located in. Everything is about perspective, right? You need to understand where the majority, where the probable reversals in the market will occur, right? And this was on a fractal manner, so this goes from a daily time frame to an 1 minute time frame to, yeah, like in a fractal manner. So like you have to understand if, for example, this order block is let's say this supply and demand zone, right? Order block, supply and demand, same thing. Let's say this highly query resistance zone order block is probable. Would you say this setup right there? Of course you can still trade it, but is this a probable setup, right? If you're thinking about it. No, since look at this engineer liquidity, and it's even more engineer liquidity here. Is this probable reversal up here? No, but since it can still happen, since it's probabilities, you can still have this occurrence. Since market is to an extent random, you have to understand it's to an extent random, but you can still take advantage of it if it forms these things, pretty much forming chances of an occurrence, um, improving. And I don't like to talk about and distinguish concepts so much, right? I don't like to talk about concepts so much, since I only talk about the concepts I have in my model, or I try to stick to them at least. Since if I were to, no worries, Vlogs. Thank you so much, bro. Thank you so much for everything here. You also take care. Since I don't like people being miscommunicated me trading intuition, right? What people would say is, oh, but hopefully at least order blocks is part of your model. But like what people would do, right, is just, oh, this is a high probability order block, or this is a high probability fair value gap, or this is like an rejection block, or this is like support and resistance zone, and they mix all of these concepts and they never form a step-by-step process. I have a step-by-step process. I'm looking at fundamentals, and I'm looking at an alignment in the fundamentals, and I'm looking for the markets to go from those fundamentals, and I'm looking for a time-based liquidity sweep against those fundamentals, and then I'm looking for a mean reversal. That's my model. So if you think about it here, I won't explain it in detail, but here, trading from fundamentals, engineer liquidity getting taken out, time-based liquidity, mean reversal, reverse into the mean. That's my model. That's my model. I usually just say it's a time-based liquidity. No, it's just external alignment and a time-based liquidity sweep, and that's essentially what it is. It's some things more into it, right? It's a little bit more complex because you have to understand which externals, what I'm specifically looking at, and what time-based liquidity specifically you are to focus on, and when you are to take a trade, when you're not to take a trade. But I like to have definitions of things. I like to have like strict definitions, since I only trade these things. Like I've not traded for 3 weeks, I think. 3 weeks. Oh, well, let's see when I took the last trade. I don't even know myself. When was this? Tuesday, 3rd of June. That's when I took the latest trade, and it was a loss, as everybody can see here. Tuesday, 3rd of June, and it was such an amazing trade. And then I took another one, 29th of May, and I think what's the date now? 9th of June, I think. So I think was this last week I took a trade? Bro, am I stupid or something? Let's see. Yeah, it was the last Tuesday I took a trade. So took a trade 6 days ago. Oh my gosh, I just forgot about it. But it's actually much trades, bro. I've taken so many trades here. Oh, but that's amazing, bro. I got 3%. and still not home. But that's good, bro. That's still very good. Okay, is this your euro analysis? I'm looking for something like this tomorrow, but for your USD. Let's see here. Oh, is this for Nasdaq? But this is for Nasdaq, bro, isn't it? Oh, okay, okay. I understand now. I'm sorry. Yeah, this looks good. This looks good. Use 100. Yes, exactly, bro. Wow, we're getting the same levels. Look at bro. Bro is getting the same levels here. Look at Bernie here. Very freaking good, Bernie. Very good. Big ups. Big shout out to you, bro. Looking very, very good. Very, very good. Anyways, I think this will be it. We have had a call for 35 minutes. I think, 10 people listening, the rest of the P server, people in the server is bots, I guess. So, yeah, a very sad reality. But hopefully, at least you got some great sauce of this call. I hopefully understood some parts of it. This call potentially will not get uploaded since, I think this, I wanted to just host a public call and see who joined. And I think majority of you guys have actually rejoined and been in all the significant calls. So I just want to give a shout out to the people actually listening to me. Thank you all so much, and I'll see you all in next given public call. Thank you all so much, and I'll see you all. Bye, guys.